Okay, week 46, outlook 1 of 2. Let's get into it. So, GCAD, we're still inside of this trade. We're still, in a very great position here. We had some sort of pullback from the macro perspective. All we did was pull back into this daily price gap. We mitigated 50%, basically tapped, the ordinary open here of the wick. And now we're giving a valid response or a good response to push price higher. So not much to say, just looking for a continuation of this price action supporting our bullish play, targeting this high here, and then ultimately the high of the price leg. On GBP USD, similar price action. This actually is a little bit cleaner price action. We're actually starting to pick up momentum. Green candles are picking up. We've cleared this immediate inertia or this liquidity here. We broke past it, and then we sustained another break on the candle higher, and there's nothing here stopping us from reaching, this price gap at least, and then pushing higher than that. So expect GBP USD to continue higher. That's what I'm expecting. Let me not say expect. I'm expecting GBP USD to continue higher, continuing this bullish price action based off of the mitigation of this price gap here, which I talked about in a previous outlook or one of the trading videos or one of the trade reviews. All right, so that's GBP USD on the NASDAQ. Everybody's been trading the NASDAQ lately. All right, so the counter analysis, or part one of the scenario of the counter analysis, played out, in which I said, hey, we should be looking for continuation plays. I looked for possible opportunities here. I looked for possible opportunities inside of, this candle. But ideally, if I'm basing all of my trade ideas off of the macro perspective, specifically the daily time frame, and refining from there, then after this entry failed, I should have just looked for price to run this low, in which it actually did run this low. And so in the week 45 outlook 2 of 2, I explained that if the counter analysis played out, we would look for targeting this low, and then we would have to assess the action that occurs here to determine if we transition into a bullish range, which means we transition to the bullish range, or continue on with the current bullish trend. And that's based off of the action of mitigation, or not action of mitigation, the action of transition. And we have two actions of transition, which are a break of structure, and the other is a liquidity draw. So the one that occurred so far is the liquidity draw, which is expecting. All we did was shift our structural point from this low to now this low. So we just shifted our structural point slightly lower, displaced it, maybe like a few points here. And so now we're expecting price to continue this bullish price action unless, counter analysis, this price gap here gives us something to play, provides, any resistance and then continues price lower. Other than that, it's continued scheduled program, expected, hey, if everything fails in here, logically, it's not, hey, we're not on the wrong side of the move. We just look for what happens at the next liquidity point, or in this case, structural point of this bullish trend. And it's exactly what happened. So no love loss here. This is just regular programming. We know exactly why this occurred. We know what the reaction was. We know what the response is. We know how to play with this. All right, USD JPY. All right, we're just consolidating inside of the range here. So I did talk about a potential entry in here a while ago, but now that I'm looking at it and based off of what I'm saying, I'm just going to go ahead and delete that, because everything, remember, I literally just said that basing my trades off of the macro perspective daily, then I really should be looking at, stuff like this here. Yes, this wick is something, but if I want to prioritize key plays, I would probably play this price gap. And because I missed that price gap, I'm just going to go ahead and forego looking at this until, or not forego looking at it, but forego looking for any entry opportunities until we reach up into our macro area of interest, or we pull back and clear out some of these liquidity points, giving us an action of transition here. The other possibility is that, we mitigate this price gap, but automatically I would invalidate this, because even though this is uninterrupted price action, it failed to take out this high here. Yes, we took out this internal high, but because we generated the price leg already, this really wouldn't be valid to me. So I would be looking for some sort of liquidity draw at this low if price were to fail, you know, taking out this high, or action occurs here, etc., etc., etc. So that's UJ. All right, gold. So I was in a couple trades on gold. The first one was based off of this 4-hour sponsored candle that I tried to play here, and ultimately that ended up failing. So because that ended up failing, I decided to, hey, I know I had another opportunity here. I had that 2-hour price gap that I refined from this daily price gap play here, matched up after we mitigated 50%. And so I was like, hey, I'm going to play that. And you can see that ended up failing as well. So what is the reason why? Excuse my voice. We ended up actually, this right here, this action of transition here, the more I look at it, it really looks like a liquidity draw. But more importantly, it's actually a double action where we had a liquidity draw and we also had a action of mitigation, which was a price gap mitigation play of this daily price gap, in which we basically hit 100% of this price gap here. And then right above that, or just before that, we had a liquidity draw of that price gap there. So what's happening here on gold is we're in a pretty key area. You see we got some consolidation, and now we're starting to pick up speed going towards these highs. So if this is playing out from the liquidity draw plus mitigation, I have no confidence right now in any sell positions. Based off of this, I would be expecting continuation of the program and taking out all-time high. Now, the reason why I don't like this price gap here is, once again, remember, I always look for those sort of, I look for those uninterrupted price action plays to take out liquidity or structural points. And because we had turbulence right here, this price gap here isn't promising. Although this price gap is a little bit supported because of the fact that this price gap on the opposite side, this bullish price gap here, we mitigated 100%. It gave turbulence and then failed to continue price action higher. So there could be something here, and we most definitely could get a response. But if we were to, say, transition here, what I would be expecting is actually, let me start clearing some of this here. Get rid of that, get rid of that. What I would be expecting is actually respect of this price gap, of this macro price gap here, this daily price gap here. And so right now we're at, 100% of it, and the stop loss or the invalidation region of this price gap would be here. So if price were to take out this high, I would still be expecting maybe some sort of small response from here, but I would be expecting all-time highs to be mitigated. If not, I want to see this maintain and roll over and give us the sell side bias, continued sell side bias. And that would validate, this being a break of structure. And it just so happened that this break of structure was not strong enough to disrespect this price gap or this action of mitigation. So we had an action of transition and action of mitigation. The action of mitigation overpowered the action of transition, in which we now continue price higher. All right. Or, another way you could also look at it is you have, if you interpret this as a liquidity draw, then you have double action of transition plus action of mitigation means, transition back to the continued program there. All right, so that's what I'm seeing on gold. I really want to see, what price does, but TLDR, GCAD, looking good. GU, looking good. We got positions on both of those. Gold took some L's. NASDAQ, looking for that continuation of the program, or we're going to see if price decides to give a counter trend or a counter analysis or counter play. And then gold, UJ, we're waiting to see what that does, what it decides to do. It's in limbo right now. And then gold, we're here setting up for potential long buys or long sells. All right, peace.